In this video, we'll discuss 6 methods of investing in gold. India loves gold. Let's accept it as a fact. It is a status symbol for some wear it just to show off. It is a sense of security for others. And this is why buying gold throughout the history of Indian culture has always been a very good thing to do. So let's get into the first method of buying gold, which is buying jewelry. The first advantage is obvious because you can show off your gold while buying jewelry. You can wear it to events, you can show off in front of your family and friends. You can wear as much gold as you want. It is a thing in India. Let's just accept and leave it at that. And moving on to the disadvantages, here the list of disadvantages are very high. The first disadvantage that you'll probably see is a making charge on this jewelry. A minimum making charge of 10 to 15% is what you can expect while trying to buy gold jewelry for your investment. Then there is a concept of 3% GST that you'll have to pay while buying this gold. The next thing you'll have to worry about is the quality or purity of the gold which you're buying. Here, if you're talking about it, if you're buying from any source in India, right, unless you're buying from a very trusted, certified jeweler, the chances of you getting cheated here is very high. So just keep that in mind. The next disadvantage is the storage cost of jewelry in India. Imagine you're buying jewelry in India and you have to store it somewhere. You'll have to store it at your house where it is very risky, and then maybe you'll have to take a locker in a bank, and then more charges are being spent there. And overall, you'll be spending a lot of money and headache just to store this gold without you even knowing. So let's move on to method 2, which is buying physical gold or bullion or gold coins or gold bars. Here the advantage is again obvious, right? Because unlike jewelry, you'll be for sure getting higher quality gold. You'll be getting 24 karat gold at hallmark will be there, and everything will be safe. But the next two things that you'll have to worry about, the two disadvantages, you'll still have to pay the 3% GST, and second, you'll still have to worry about the storage of this gold coins and bars. Now let's look at the third method of investing in gold, which is becoming very common in India, which is digital gold. Here you're actually buying gold in itself, but you're storing it in a digital form. Another entity is storing it in behalf of you, and you can take delivery later if you want. But in the exact form of buying digital gold, you're just buying digital gold like you're storing money in your bank account, right? Here the advantage, the first big advantage is that you can start investing with just 10 rupees. Some apps offer 10 rupees, some start from 100 rupees as well. You might have seen this everywhere, including on PhonePe, Paytm, Google Pay, everywhere. Through everywhere, you can start investing in this digital gold, and you can start enjoying the appreciation of the price of gold. The next advantage is that you don't have to worry about purity at all. You're getting guaranteed purity as assured by this entity here. And you do not have to worry about storage at all, right? Because now you're storing it in a digital form. You don't have to take a bank locker. You don't have to spend more money on just storing this gold. And another big benefit is you can sell this anytime. There is high liquidity. You're selling it back to the person you bought it from. So you can sell it at any time you want, 24 hours a day, 7 days a week. Now looking at the disadvantages, there's still a 3% GST that you'll have to pay, and you'll also have to pay a platform commission to all these apps that you're buying from, a small commission of 0.5 to 1% every time you buy or sell. That will end up being a huge amount if you're buying for a big large sum. But if you're buying in quantities of 100 rupees, 500 rupees, it might not be a concern to you. The fourth method of investing into gold is through gold ETF. As you can see here, these are the list of the most popular gold ETFs in India. You can choose to go with any of them. These gold ETFs, you can imagine them as mutual funds where they buy gold in behalf of you, right? You're not directly purchasing the gold. You're buying these gold ETFs so that you'll get the same appreciation which you'll get on your capital as if you are buying gold. Here the purity is guaranteed because another person is verifying that and buying the gold for you, as well as there is high liquidity as well. Here also you can start buying anywhere between 10 to 50 rupees. You can start your investment in gold. The disadvantages here are that you should have a demat account of your own. If you do not have a demat account at all, I'll have the link in my description and pinned comment. You can start or open a demat account directly from there. And gold ETFs will also be having an annual charge of 0.5 to 1%. Again, this is also something you'll have to pay. And another disadvantage of buying an ETF is that even though it is highly liquid, you can sell at any time that you want. You'll find a buyer. This is only during stock market hours. So 9:15 AM to 3:30 PM, between any weekday, any non-stock market holiday is when you can buy and sell these ETFs. The fifth method of investing in gold is through gold mutual funds. Again, you would have probably seen it in a lot of times. You would have probably seen it in apps like Grow, Kuvera, everywhere. But we'll quickly run down through the advantages and the major disadvantages as well. The first advantages here are obvious. You don't have to worry about purity, you don't have to worry about making charge, you don't have to worry about storage as well. But the big disadvantage comes in the cost of managing these mutual funds. These mutual funds have a cost of their own, meaning that they'll charge you somewhere between 0.5 to 1%, and these mutual funds often invest in ETFs. Right, so the ETFs have an underlying charge as we discussed earlier, and these mutual funds have an additional cost above them. So I would not suggest this method to anyone. Now the sixth and best method of investing in gold, according to my opinion, is through buying sovereign gold bonds. These SGBs are usually issued by the RBI every 3 to 6 months. So what happens here is that the government tells you that, hey, this bond that you are issuing to you has the same value of at least 1 gram of gold. And as it is backed by the government of India, it is very secure. You do not have to worry about purity. You do not have to worry about additional charges as well. It is by far the best form of investing in gold that I can suggest to you. And there is one added benefit here as well. So let's say gold grows at a rate of 5 to 7% in the next few years, right? So while buying an SGB, the government also assures you a 2.5% interest, an interest component on holding this SGB just for free directly to your bank account. So that means if you're investing 1 lakh rupees into SGBs, across the 5 years, you'll be getting 2.5% interest on this 1 lakh every single year. You'll also be getting whatever values that gold is worth at the end of 5 years, you'll be getting that as well. So I would say it is an amazing way of investing in gold because, as I said earlier, you do not have to worry about storage, purity or any of that. It is being issued by the Reserve Bank of India. So you do not have to worry at all. The next advantage, especially for stock market traders, is that SGB is a pledgeable asset, and as we discussed in the last video, if you're interested, it is a cash component while trading as well. So you can pledge this asset and use that money to take trades in the stock market. And the next advantage that I wanted to talk about is that if you're holding it for a period of 8 years, whatever capital appreciation you're getting on this sovereign gold bond, you do not have to pay any tax on it. For any other form of gold investment that you saw before, if you're holding for a period up to 3 years, 0 to 3 years, you'll have to pay capital gains tax as per your tax slab. And if you're holding it more than that, you'll have to pay a long-term capital gains tax around 10% as well. And the only thing that you have to pay tax on is that 2.5% interest rate the government is giving you. From that, the government will take a portion of it back as tax based on your income tax slab. Quickly looking into the disadvantages, the first disadvantage is that you'll be holding this SGB for anywhere between a period of 5 to 8 years. The liquidity is slightly lower while trying to sell this SGB, so keep that in mind. And also you'll have to invest at least 1 gram worth of gold in multiples of 1 gram, right? That means you'll have to invest in multiples of somewhere close to 5,800 to 6,000 rupees. This is also a disadvantage while buying SGBs. Now the third disadvantage here is that liquidity is slightly lower. So do make this investment only if you are planning to hold it for a long term. After a point of 5 years, RBI will be ready to buy it back from you at whatever price is there. And after the end of 8 years, RBI will buy back this gold bond from you, right? You cannot hold it for more than 8 years. So I believe that the advantages for SGB outweigh the disadvantages, which is you'll be getting a 2.5% annual interest rate along with your investments. You can pledge this sovereign gold bond for trading as well. So the next SGB release is going to be on September 20th. The last one happened in June, and you can go to the RBI website and directly apply for this SGB allotment. So this is not a video where I'm asking you to go directly invest in gold. If you're an investor in gold over the last many years, you would have seen that it's not giving you amazing returns at all. And this video is only for those who have already decided to buy gold and are looking for the best method to invest in gold. So yes, thank you for watching the video, guys. And if you have not watched our previous video on how to supercharge your trading by pledging assets like gold bonds, right? You can watch it here. And this is Ajay Ajith signing off. See you all. Bye bye.